Hi, it's Jo Bills from Freshagenda. We're here on a beautiful late winter's day, starting to feel like spring already. And when you think about spring, you think about grass. When you think about grass, you think about cows. And when you think about cows, you think about milk. So we're having a bit of a look out on the prospects for milk in the Southern Hemisphere. We've just had a seasonal outlook update from the Bureau of Meteorology here in Australia. They're looking at warmer temperatures through September to November and about even chances of median rainfall. We've had fairly dry conditions, although here in Melbourne we've had a very wet week and in lots of parts of Victoria. The prospects for the grain crop locally will be an important factor in terms of feed costs for dairy farmers, as well as that homegrown feed part of the equation. Across the ditch, in New Zealand, an outlook from NIWA earlier this month is for similar conditions really, warmer than average temperatures through August to October, and probably medium to above median chance of rainfall over most of the country. So pretty good conditions in New Zealand for milk production. There's a few different views out there in terms of how big that rebound will be for New Zealand, given that there's a fairly good payout forecast in the offing for dairy farmers. The other big news for this week is of course the announcement of Murray Goulburn's 2016-17 results. And while there's been wide reports of the loss of milk from Murray Goulburn, seeing the numbers down on paper is still fairly sobering for a lot of people, I'm sure. So Murray Goulburn have reported a 21.8% drop in milk intake. That puts them at 2.7 billion litres, still the largest collector of milk in the country, but that's a significant loss of milk, and of course the ability to spread those overheads over a smaller pool of milk is really going to challenge their ability to be competitive on price. Looking ahead to 2017-18, Murray Goulburn are expecting that intake will be around 2 billion litres, and they've reinforced that they think they'll be able to pay that $5.20 kilogram milk solids opening price that was announced earlier in the year. They have sought expert advice to be able to deviate from their profit sharing mechanism to ensure that they will be able to pay that price for this season, at least that price. The big risk for Murray Goulburn, of course, is further losses of milk. The other big announcements in terms of local companies this week will be Bega. They'll be announcing their 2016-17 results tomorrow. They've had a big year, of course, with the purchase of the iconic Vegemite brand. So we'll all be looking forward to seeing what Bega has to say in terms of their outlook. And I think it's fair to say that it will be a fairly significant contrast to what we've seen from Murray Goulburn today. In the US, the latest milk production results are showing that July was 1.8% up for the month, and milk production in the US just keeps chugging along. This chart just indicates how increasingly over the last few months a lot more of that increased milk production has been driven by herd increases, and this month we saw a 74,000 head increase in cow numbers compared to the same month last year. But still, that cow per yield is what's really driving milk production. Across in the EU, coincidentally, we also saw a 1% increase for the month, but that was the month of June across the European Union. Some fairly surprising results. In Germany, certainly, their production for the month was just down 0.4%. And that's a bit of a turnaround from the minus 2.5% we saw the month earlier in May. But there is a lot of divergence between different sources of data, so we will be watching closely to see if there are any revisions over coming months. I've been Jo Bills from Freshagenda, and I'll see you next time.